Hey, it's Mack with PriceActionTradingSystem.com, and it is Monday. It is June the 20th. This will be our chart lesson for the day. And really, we really had a big gap open this day and traded up, but we traded back down, and in the end, we spent most of the trading day in a trading range. But there's a pretty good trend up and a pretty good trend down, several good trades. So, pretty good trading day. Somebody again asked me about the gap that I talk about. I'm going to explain this one more time, and hopefully people can understand. Today you can see the gap. Look where we closed, and then look where we opened. Well, there's no trading in there, so there's a gap on the chart right there. Normally you can't see it because during the overnight it'll be trading up. But look, assume that this is where we closed on Friday, and then this white spot is where we opened at 8:30 on regular trading hours. So on a chart that covers the overnight, you won't see a gap. There's not one. But the daily chart closes here and opens here. So try to picture this not being here, and you close down here and you open up here at 8:30. So there's no trading in there. And so usually the prices will try to come down and trade back through that during the regular trading hour and fill that gap. We didn't fill it today. We couldn't get past the overnight low, which was right here, uh, because we gapped open to there. And so I hope that's clear. Only thing I can tell you is this part, it won't be on there on a daily chart. Just assume from that line, which is where we closed on Friday, to this line where we opened at 8:30 on Monday morning. So if you take all that out, then prices closed here and opened here on a daily chart. And so there's a gap between where we closed Friday and where we opened up at 8:30. And I'm talking about Central Standard Time here. So, but if you look at a 24-hour chart, normally you won't see any gap because it usually closes and opens right up and starts trading again. But there's no trading over the weekend, so we gapped open. And you won't see that very often. Usually we'll open right about where we closed, but the gap will be on the daily chart. You won't see it on this intraday chart. So it's confusing for people because they don't understand how charts work. So go Google charts, and that's basic stuff that you should understand. So I hope that's clear. But I get a lot of questions on that. People can't understand what I'm talking about. But this is where the market closed on Friday. This is where it opened at 8:30. So on a daily chart, you closed here and you opened here. So there's no trading in between that point and there on a daily chart. So there's a gap right there unless prices back up and fill it. So hopefully that's clear. If it's not, just Google it and read up on it. That's pretty basic. You should understand that kind of stuff if you want to trade. So I hope that's clear, though. I don't know any other way to explain it any clearer than that, but I hope that helps the people that, um, there's several people that have been asking that question. So, but I'm going to back out here where we can see the chart a little better. We had a nice trend up, and then we reversed. We overshot it. We never could get a retest, but sometimes when you overshoot it, that happens. And then we traded, had a nice trend back down. And if you just traded it every time it came back to the key entry point, you had good trades there. So, but let's talk about the first trade I saw. We were just kind of stuck along the top of this trend line here, and I don't think you want to be taking any shorts. There is a failed second entry long here. Look at the new high. You pull back first entry, pull back second entry. So there's a failed second entry long there. It is really the first close outside of that little trend working down. So we're probably going to come back down to the low side. So that's a trap. There is enough room to get out. So if you want to take that one, it's a little bit aggressive. I'm okay with it. But this is the trade you're waiting on. As soon as you get that, now you got your break, a new low, and it bounces right off that trend line. Nice little bullish reversal bar. Just go long right there, and you ride it all the way back up, and guess where it turns down? Um, it was tempting to go short there, but again, you got to be really careful. So I would wait on like a trap of some kind. I definitely wouldn't go short into that EMA, right into that support. Uh, So I would just sit tight on any short right there for sure. And you're not really expecting to get along, but when it bounces there, notice the new low. You get a first entry short, second entry short, and that's a big bearish bar, and it's right coming off the top. But you don't want, you got to realize that this is an uptrend. And it's probably going to touch here and bounce, but it doesn't. It can't even get below the EMA. So I like going long there on that trap. That's a nice trap. It's another nice trade. And then look, we got one working back down. You get a close outside, a move to a new low. And I got that one green, but notice it's not back to the trend line. Even if you tighten this thing way up to the closes, it still doesn't touch. And so it's tempting, and you may miss a trade by waiting. So it's a little aggressive, but if you want to go long there, you can. But I'd make sure I had my stop below that trend line just in case. And it does turn back, and then so now you got another touch of it, and you got a nice bullish bar. Just go long above that one, and that's your better entry. But if you did enter here, I'd be adding on right here because this has been a strong uptrend. And look at it, it goes all the way up. You get a close outside. I did mark this one with a green. It's an overshoot. We're way away from the EMA. It's a big bearish bar. But there's no break of this trend line. If there had been a break of that, I'd say definitely go short there. I'd probably make it blue. But because there's no break of that trend line, it's risky. You could break, close lower, and turn back up and make a little higher high. But these turn out to be really good trades. So if you want to be a little aggressive, that's another spot you could be a little aggressive. There's a failed second entry long here, and there's a little bit of room there, but I don't think I would enter right there. I think you're better off just to wait coming down. Uh, there's even another second entry short, but it's right into a double bottom there. And we did get the overshoot. We do get a break now. So you're thinking long. Look what's happened. There's a failed second entry short there, but look at that. It's just stacked up side by side. There's a couple of dojis in there. There's 1, 2, 3, 4, 5, 6, 7, 8, 9. So that's more of a trading range. If you draw your bar and drag it down here, you can kind of see that right across there. And so I wouldn't be going long into that, and I wouldn't be going short really right into that without a trap. And we do get a trap right there. And it actually sets your trend line. And so you got plenty of room to get out before here. I like that one. And then it just kind of goes sideways again. But look at your new high that it pulls back. You get a first entry long, pulls back, you get a second entry long, and you get this big bearish bar. I'd probably wait on this bar or break below it, and then I'd drop my limit order back where you would have had your stop here. And because that confirms that trend line, and that's a nice bearish bar, and that one takes off. So again, you do have that support across there, but notice how you're making lower highs each time, and the closes are getting lower and lower. That's a good sign. And I would look for at least a measured move here down. Just like so, and you see we get just about, we went a couple of ticks further and then it bounces. So that would have been a great target. Once you touch down here, I would have probably exited. And then we're kind of going sideways. Again, I don't think you want to go long because you got a confirmed trend working lower. We do work our way back up. And this is, again, just a little trading range. So you can treat this like a failed break. There's not really a little trend there. It's more of a trading range. And you get a little failed break higher. And you get this bearish bar. But I like waiting on this one. And going short right here. And again, it runs all the way down. We get a little overshoot here, so you got to be careful on the way back up. And notice this one working up. You get a close outside. It tries to go higher once, twice, 3 times, and then it turns. I'd go short right there. Your stop really has to go up here. And it's tempting to go short right there, but that's the first close outside that trend line. So you got to be real careful about it. But when you try to touch it a couple more times and get a double test of that, and you got a bearish bar, I like going short right there. And if you waited on this one, you might drop a limit order back up there. I don't think you would have gotten filled. I don't like going short that much on that one, but when you get the failed second entry long there, you still got room to get out, and down it goes. And then it bounces again, but that gets you into the 2 o'clock hour. So this was a fairly simple day. If you found the trend lines, you just wait on the pullbacks to the trend lines. You would have had this one long before you came in. Uh, you would have had this one easily by 8 o'clock. I mean, you actually could have had that trend line by 4 o'clock. So, I mean, this one was here well before you came in. And then this was easy to find. And then these were all easy to find coming down through here. There weren't as many trades today. But the ones that were here were all good ones. And you would have caught some runners today. So, really good day. And again, I hope you understand that gap thing. What you got to understand is on a daily chart, everything from where we closed to where we opened at 8:30 is not on this chart. Will not be on the daily chart. So you're going to have a gap between there unless prices back up during that same day and fill that gap. There will be a gap on the daily chart. And so there should be a gap on the daily today because we gapped open and we never closed it. I haven't gone to look at one, but if you check out a daily chart, there should be a gap there. Okay, this might be a little hard to see. But this was just a quick chart I could find of a daily S&P 500. And you can see there where it opened and we traded up and then we closed back down basically where we opened, and there's a gap right there. So I hope that's clear. This doesn't show all the trading in the overnight. Notice there's a lot of gaps on these charts because we've had a lot of gaps lately. But this basically mirrors this is actually an S&P 500, but it pretty much mirrors the ES. They pretty much run congruent. You know, whatever you open and close on one is basically the same on the other. So I hope that's clear. If I could find I'm not going to spend a lot of time hunting down a chart. I just found this one real quick. But I hope that makes sense now. You can see that gap from where we closed and opened, and we traded up and closed back down, and there's still that gap there because we didn't fill it today. And I hope that's real clear now. But anyway, here's the other chart again, and you can see that there's that gap right in there. We opened here, we traded up all the way to this point, we traded all the way back down to right where we opened, and we ended up closing just a tad higher. On the other one, it showed it closing right on the same low, so it must have closed right down here on maybe on the S&P 500 it closes at 3 instead of 315 or whatever. I'm not sure, but they're basically the same. So I hope that's clear now, showing you that. And I'm going to wrap it up for the day. But we'll be back again to do it tomorrow. But actually, there was one other thing I wanted to talk about. It really won't affect us day traders, I don't think. But I got something today on the margin. They're expecting something. Let me just go look at my email again. They're going to change. They're expecting something to happen in the euro. They're voting on some changes over there. Hang on just a second. Let me just. Okay, if I understand it, what's happening is the British are voting on leaving the European Union. And so I guess they're expecting that if they leave, there's going to be some craziness in the market. So they're raising all of the maintenance margin, but maintenance margin is just overnight. Day trading margin usually doesn't change. But just be aware that on the 23rd, something crazy could happen. Even for us day traders. So we need to be aware of that and kind of, see how the day goes that day. But generally, prices don't gap once they start open. They might gap open from some news, but they'll usually trade. You can see there's not any gaps in here. And so as long as you have your stops in place, you shouldn't lose more than 2 points. Even if something crazy happened, you might get a little bit of slippage or something, but you shouldn't lose more than 3 points tops day trading. So they aren't saying anything about changing the day trading margin. They're just saying the maintenance margin, which is what you have to do if you carry it overnight. But that's one thing I love about day trading. is that, used to when I traded the daily charts, you'd go to bed with a great profit and wake up and find out you had a loss because the market gaps and does something crazy. Well, as a day trader, we don't have to worry about that. And that's one of the reasons I like day trading versus trading the overnight, because you never know, over a weekend something crazy could happen, and it does. And this is a good example of it right here. If you went to bed Friday short from here, you had a nice little profit, and then you wake up on Monday morning and it opens here, you're stopped out instantly for a 30-point loss. Well, that can't happen to you day trading, because prices will trade through that. So that's one of the dangers of trading the daily charts, and it's real, and it happens to a lot of people. And 30 points, that's a lot of money to lose, and just from the close to open. You go, like I said, you go to bed on Friday with a nice little profit, expecting the market to maybe go lower, and suddenly it gaps open and trades straight up, and you're in a bind. You're stopped out instantly here, most likely, unless you're trading some huge stop, and then you're just taking a big chance. And this thing may not. I mean, it hadn't come back yet, so who knows? But we need to be ready for Thursday, whenever, the 23rd, whatever day that is. I guess that's 23rd will be Thursday. Yep. So I'm guessing there's going to be some fireworks, probably even in our market, if something crazy happens and the British leave the European Union. So it could get ugly. But just be aware of that. We won't worry about it till Thursday, and since we're day traders, we still won't be that concerned about it unless the market's just too volatile. If that's the case, we'll sit on the sidelines and watch until it slows down again. So that's nothing new. Then I mean, that'd be just maybe similar to a big FOMC announcement that catches everybody off guard. We just sit on the sidelines till it's over. So and then we jump back in. But anyway, it's that. There was one other thing I want to talk about today, since we're done a little early. Let me find it. An email I got here from a trader. He sent me this on Friday. Hi, Mac. Wonderful day today. I've been trading for exactly 1 hour, and I'm done for the day using two contracts. I took 4 trades, and I'm closing at over 10 points. Sharing my chart as well as my account performance for the day. Please feel free to share it with others who have doubts about your price action rules. I was an absolute newbie 1 year back when I started following you, but I have been religiously following the rules, looking out for the key entry points, and just staying with the trend. It's helped immensely. This stuff works. Thanks for sharing your knowledge with us. Regards, and he gives his name. Let's just look at his. We'll open up his performance here, since he says it's okay to show it. I'm going to show it. Maybe. There we go. I think it's about to open here. I'm going to pause this while it's opening. Okay, here we go. He did cover his account number up there, so that's good. Looks like his cumulative profit, 10.25 points. So yeah, excellent. So I know people want to hear, like to hear me share this stuff. And this is on the June 17th, so that's Friday. And yeah, great job by this gentleman. So I'm happy for him. This stuff does work. Some people get it quicker than others. Generally, in a year, I'm hearing a lot of people still complaining that they're not getting it yet. But everybody's different. Some people might take 3 or 4 or 5 years. This is a skill. Just remember that it's a skill, and you have to hone. You have to work at it. And you're going up against really skilled and really, traders that know this stuff like the back of their hand, that have had years and years. I mean, myself, I've had over 12 years experience doing this. And so, that's like think about that. That's like a pitcher in the majors that's got 12 years of experience versus a new guy that's been pitching for less than a year. Who do you think's going to have the more experience? And so just remember that this takes time. Some people get it quicker than others. It took me about a year and a half to get profitable, and then it took me about another year to get consistently profitable. Meaning, what I would do after about a year, I was making money, but I'd have these dumb blow up mistakes where I'd hang on, hoping I'd for whatever reason, I'd say, oh, I'm gonna give this one a little more room, and then next thing you know, you've given it, in one trade, you lose 10, 15 points before you rack yourself in the head and say, why'd I do that? If I'd have just lost my 2 points, I would have already made it back, and I'd be on the roll. So it took me a while. That was everybody has their little mental things that will work on you. Mine was thinking I was smarter than the market and saying, okay, maybe like right here, entering and it coming down here and say, well, I'm going to give it down here. It's not coming down there. It's going to go back and retest for the high. And then I'm wrong and I end up, wait until I get out down here and I finally decide to get out. And of course that turns out to be the bottom, but you lost 10, 12, 15 points. And that's what I would do. So it took me about another year to break that horrible habit of, having 20 wins in a row and then giving it all back in one or two losses because I thought I was good. I thought I was, smarter than the market. So you got to follow the rules. You can't be moving your stops. You can't give it too much room. Put your stop where it's supposed to go, and if you get stopped out, you start over that day. And if you get stopped out too many times in a row, a couple of times in a row, maybe you get up and leave, or you take the rest of the day off. So, but yeah, it took me about a year and a half, and then it took me about another 6 or 8 months to break dumb habits to really get to where, even though I was making money before, I'd give a lot of it back, and I'd give back a month's trades in one day or something stupid like that, or at least a week or two. So don't be that dumb guy and follow the rules. Put your stop where it is, and if you're wrong, you're wrong. Just look for another trade, because really, just about every time, if I would have just let it stop me out, I would have lost probably 2 points, 1.5, 2 points, and then I could have made it back on the next trade, and then right back at break even, and then I'm making money again for the day. So we learn this thing is difficult to do. You got to not only learn how to read the chart, then you got to get the experience actually trading live and using your real money and not making boneheaded mistakes. And that takes a while. I'm telling you, it takes a while. So anyway, that's enough for the soapbox today. Congratulations to this gentleman. He's having success. Had a great day Friday anyway. So I'm proud for him. It shows you it can be done. Just hang in there. Keep working on it. Keep getting experience and keep practicing, and make sure you're on the sim until, don't go live until you've been able to double or triple a sim account following the rules. And you'll know if you were following the rules, or you were moving your stop way down here and giving it all this room that you wouldn't be able to do if you were trading live and waiting on it to come back. If you're doing it that way, when you go live, what do you think is going to happen? It's not going to work. One of these days it won't come back, and you'll be broke. And your account will be cleaned out. So don't fool yourself. Make sure you're being honest with yourself that when you do double or triple your sim account, that you're doing it following the rules. And when you can do that, then you're ready to jump over there, and you probably still need to start small, one contract, maybe just scalping out till you get over the nervousness, because as long as you're nervous, as long as you're excited when you win and you're down when you lose, you got too much emotion in it. You shouldn't have any emotions. If you win, that's great. That's what we expect to do. That's why we trade every day. That's our job. We expect to win. And when you lose, hey, that's part of the job. You can't let a loss shake you up. You just back up, you start over, and you go at it again. And it's that simple, and you don't get up or down. And if you're getting up or down, then you're not ready to go live yet, because when you do go live, you're still going to have a little bit of motion. You're going to feel those jitters. You got real money on the line, and you start slow and you just build your way up. So hope that makes sense. I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.